have the dubious distinction of waking everybody up this morning, so I hope that this presentation will be interesting and invigorating for everybody. Luckily, I think that the advent of the Sharia standard on gold is one of the most exciting developments in the gold market that we've seen recently. So I'll be more than happy to take you through what the standard does, what the impact will be, and how the World Gold Council is engaging with the broader gold industry on this topic. So as many of you might know, the AOFI standard number 57 on gold and its trading controls was officially launched at the end of last year. This standard is colloquially known as the gold standard, the Sharia gold standard. So why is the Sharia standard necessary? Some people have already said, well, gold is naturally Sharia compliant, isn't it? It produces no interest. It seems like a very straightforward, easy to understand commodity. But you have to understand that in Islamic finance, gold falls into the specific category called a ribawi item. And there are 6 ribawi items. There's gold, silver, wheat, salt, dates, and barley. And the reason why these 6 items are special is because in the past, they frequently changed hands. Gold and silver were used as currency, and the other 4 were necessary for daily survival and daily use. And because these items changed hands so frequently, there arose the need to protect consumers from potential usury or from fraud or from theft or whatnot. So therefore, there developed an Islamic tradition to treat these items as more special, and therefore more stringent rules were needed around them. That meant that in modern Islamic finance, there was a reluctance to embrace gold as a modern asset class because the rules were considered a little bit more restrictive. That led to limited Sharia guidance around gold as well. There were a couple of gold compliant products in Islamic finance before, but for the most part, the existing guidance was fragmented and limited. So what does the Sharia standard do? Well, first of all, the Sharia standard is issued by an organization called AOFI, which stands for the Auditing and Accounting Association for Islamic Financial Institutions. This is the premier and most respected standard-setting body in Islamic finance. And a pronouncement or a ruling on Islamic finance from them is generally considered to be widely received and widely respected throughout the Islamic world. So we have the authority behind this ruling that will be widely used throughout the Islamic universe. This, first and foremost, removes uncertainty. So in the past where we had some people on the sidelines saying, oh, I don't know if I could invest in gold, I'm not sure if it's Sharia compliant, having the standard out there should, without a doubt, say that gold is Sharia compliant and there are a lot of products that you can do with it. And also it gives definitive guidance. The standard, which is available online right now, is quite definitive and comprehensive. It covers a lot of different uses of gold in a modern financial sense. So why do we think that gold is so useful and beneficial for Islamic finance? Gold has a lot of potential. I'm talking to a friendly audience, obviously, but I think in an Islamic finance context, gold actually brings a lot of additional benefits that we don't see in conventional finance. Islamic finance suffers from a lack of diversity of products and also a lack of liquidity. Gold is a large and very liquid asset class, so by making gold Sharia compliant, it actually expands the capabilities and the potential within the Islamic finance universe significantly. That graphic on the right is quite a simple illustration. The market capitalization of gold is about 7 trillion US dollars. The total AUM for Islamic finance varies between 2 and 3 trillion, depending on how you count. But if you take one specific group, let's say Sukuk, which is the most probably internationally recognized part of the Islamic finance universe, gold is 24 times larger than the outstanding volume of Sukuk. So just in terms of the size of the playground, let's say, it's been expanded significantly in Islamic finance. Also, gold fills in a lot of critical missing gaps in Islamic finance. Remember, Sharia finance can't touch interest-bearing products. So there's no equivalent of the US Treasury market in Islamic finance, for instance. There's no large liquid safe haven. So in times of need, in times of distress, if you're an Islamic investor, you can either move into cash or maybe move into one of the scarce AAA-rated Sharia-compliant Sukuk out there from Hong Kong, let's say. But now with gold, you can move into a large liquid asset class during times of financial distress. Also, because derivatives are not allowed in Islamic finance, derivatives-based hedging products like CDS is not available. So if you were looking to hedge a specific risk, for instance, you couldn't do that easily in Islamic finance. But because gold acts as a natural hedge for a lot of different things, gold can also fill in that gap. And also you have the traditional sort of classic thesis for investing in gold. It's a safe haven asset, it provides very powerful diversification benefits, and it can potentially enhance returns as well. So I'll just go briefly into why gold works so well in Islamic finance. I talked about gold as a diversifier. Gold actually shows very little correlation to most existing Islamic asset classes. The graph on the left, as you can see, shows the correlation between gold and a lot of the more common Islamic asset classes out there. And you can see the correlation is very small. Also, in terms of volatility, gold is actually not significantly more volatile than common Islamic asset classes as well. So how are we taking this forward? With the Sharia standard now officially launched at the end of last year, the World Gold Council is moving into its role as a market development organization in two streams. The first is new product development. We are working hand in hand with Islamic finance institutions to create new gold-based Islamic products. We are also developing solutions that fit all the needs of Islamic investors, whether that's retail, institutional, high net worth, etc. But it's a bit of a chicken and egg because we can develop all the products that we want. If nobody wants to buy them, that's an issue. So we're also doing another stream of outreach, which is education and engaging the Islamic finance buy-side community. So we're talking to institutional investors, we're talking to all sorts of government regulators, industry boards, anybody who has a vested interest in gold, on educating them on why we think gold is an interesting and useful asset class for Islamic finance. So with that, I think I'll hand it over to the first of two panelists for this topic, who will be talking about already existing Sharia-compliant asset classes and products.
Good morning, ladies and gentlemen. I think what's probably quite apt at this point in time is to talk a little bit about the SGX contract. I'm not going to be standing here promoting the contract. It's not the point. I think the point is that we want to, or at least I want to be able to stand here and share with you some of the challenges that we have met when it comes to introducing a new contract, or specifically a new gold contract, drawing some of the parallels from what we do across multiple different commodity products. So essentially, I think the challenges for the gold contract really for us is that if you look back to 2014, which was when we first launched the contract, I think again it was born out of three key points that we were trying to achieve. Number one, we were looking at a transparent. Number two, a regulated. And number three, a credible wholesale kilobar price. And the requirements or the reasons that drove the SGX into looking at a gold contract at that point in time has not actually changed from today. So a lot of you would have heard from a lot of the presentations yesterday, which very much covers on some of the things that I'm trying to bring up today, which would be things like liquidity, transparency, credibility, robustness, and all of that stuff. All right. So for us, really, it's looking at the notion that if you have more than 60% of the world's physical trade that is in the east or migrating eastwards, then the question is, how do you actually come up with a benchmark that accurately and correctly, credibly represents benchmark pricing in this part of the world? Now, the notion then is that a physically delivered gold contract that goes into the Changi Freeport as a neutral location then clearly makes a lot of sense. Now, the exchange versus the OTC debate is actually pretty well understood. So what I want to do here is actually put out some of the slightly less understood concepts. Number one, lack of volumes means that no one's using your product. Now, that's correct, but I think what's importantly is that two, we also understand that the SGX contract is not chasing volumes. This is a wholesale contract that is 25 kgs in one lot. Now 25 kgs at today's prices is just over $1 million. It's not exactly for your mom and dad. Now the contract can work if participants are mandated to use it, or more importantly, if the contract can actually set itself up as a complementary product to the OTC market. So as I've said, the OTC market advantages very, very well understood. The SGX contract is really a product of alternative resort, right? So if you think of it as a spot contract, if you think of it as the ability or a market for you to be sourcing spot gold, then clearly it's something that I think participants should look at. Now, if you take a closer look at the contract, you'll see some of the innovative features that we have put into the contract that puts it in the slightly ahead of time category. So since launch in 2014, we have effected a series of upgrades to the contract. We have now got longer trading hours. We have got a novel approach to managing a default, right? So It's literally one of the very few contracts out there, or in fact the only contract out there, where sellers have the ability to transfer away short positions after the last trading date, apart from an ADR process. Now, at the end of last year, we have obtained a fatwa for the contract. Now, among the more salient features for the contract would be that the transaction is actually for allocated gold versus unallocated gold. Now, this is a very important development because, as Shao Kai has alluded to, it provides essentially an enlarged institutional base that's worth about 1.5 to 1 to 2 trillion US dollars. Now, if you think that 1% of that 1.5 or 2 trillion dollars can be reinvested into gold, then really we are talking about 400 to 500 additional tons of gold demand. Now, what's probably worth also pointing out is that the SGX also, as a platform and infrastructure provider, we also have ETFs on the platform. Now, one of the most actively traded ETFs on the SGX platform would be the Spider Gold contract, which, as a lot of you know, has also obtained a fatwa and is Sharia compliant back in February this year. Now, to fully convert the opportunities on Sharia Gold, I think this will require a lot of initiatives. It will require product innovation. It will require multiple efforts across multiple parties, across multiple regions on price discovery and transparency. Now, why is all of these things important? Again, if you draw back parallels to some of the products and markets that we see across the commodity space, you would find that different markets, while they offer different challenges, a lot of the challenges can really be summarized into some of the unique points that we have mentioned just earlier. So from the perspective of the exchange, we have seen about 8 tons of gold that's traded on the platform since launch. All of these different developments are really just baby steps, but all extremely important in the evolution of a 300-year-old market where fixings have really only started about 100 years ago. And all of this, again, is important in providing a credible, transparent benchmark to the market. Now, what I'll do just in closing is to say that from the perspective of an exchange, I think for us what is really important is the development of new products, products which is not only on the SGX but importantly on multiple different exchanges that serve as an ability or serve a tool for the industry to actually look at new and alternative ways of doing things. If you look across the span of what's hitting the headlines in multiple publications today, if you look at, say, ICOs versus venture capital funding, if you look at cryptocurrency and also blockchain technology, there's a lot of changes that's actually happening in the commodity space. And what I think is important, having done the stretch of conversations and engagements with a lot of you on the SGX contract, is really to think about, again, alternatives, different options and different ways of managing price risk, different ways of assessing spot gold, which I think is extremely important because we're seeing multiple disruptions across multiple markets. We are seeing plans, we are seeing markets, we are seeing users in, say, for example, the coking coal market that is struggling to adapt to changes, and all of these things would be extremely important in driving the next stage of development in the markets. So with that in mind, I think I'll leave some of the specificities of the contract and how it achieves Sharia compliance status to the Q&A just later on. Thank you.
Good morning. There are a few interesting statistics to talk about today and opportunities for gold, and specifically Sharia compliant gold. Just in ASEAN and China alone, there are about 800 million people who can save, who actually are able to save in these countries. And of these, more than $400 billion is put away each year in cash. And as Shao Kai pointed out earlier, one of the challenges in the Islamic world is that they have no other options than to put it in cash if they're worried about the risk environment of whatever assets they otherwise put money into. That aside, for a lot of these 800 million people, they actually don't have access to good financial products, and they have no choice but to put it in cash, your normal savings account in the bank. And within this 800 million, there are about 500 million of these people that have no access to good financial products to get access to affordable financing. And for us in Hello Gold, that is the opportunity that we have in front of us. So we aim to solve three key problems. One is an over-reliance on cash by these 800 million people, earning very little in terms of nominal interest rates and negative returns from a real yield perspective. And also we want to address the problem of giving them access to good financing products. Only 20% of these folks have access to a lending product from the formal financial institution. What that means is that if they're lucky, they can get a loan from a subprime lender, and they'll be typically charged between 15 to 25% per annum in the Malaysian context. If they're not lucky, they'll have to resort to friends, family, or ultimately to loan sharks that charge 10% per month. And that's the challenge that they face. And last but not least, a lot of these folks also have the issue of having very costly remittances that typically take 3 to 5 days and have a minimum threshold and very high charges. So what is Hello Gold? Hello Gold is basically a platform that targets very specifically the mass market. So none of you guys in this room are our target customers. We're targeting the middle 50% of every economy in emerging markets. We enable them to get access to international spot prices through a mobile phone, 24/7, real-time settlement, and obviously Sharia compliance. It's affordable because we plan to offer gold for 1 unit of a local currency, whether it's 1 ringgit, 1 Thai baht, 1 Indonesian rupiah. And our fee structure is very competitive for the transaction size. And over and above that, with our lending partner, we plan to offer affordable loans at about 40 to 50% lower than competitive prices in the market today. And obviously it's secured because the gold's vaulted in Singapore. The back end, in terms of the customer records, are held on the blockchain, and the gold is fully insured and allocated. Now, who are we targeting specifically? Out of the 800 million people that I referred to earlier, there are about some 400 million customers across ASEAN and China. They typically only earn about $13,000. And it's not that they don't have access to banks. They have bank accounts. They probably have a mortgage. They probably have a car loan. They probably work for you guys. But they don't have access to good financial products. And frankly, they don't have access to just fixed deposits. In the Malaysian context, to open a bank account and to open a fixed deposit with a 1 month tenure, you need a minimum deposit of 5,000 ringgit. Just to give you a sense as to how big that number is, the average salary, monthly salary in Malaysia is 5,000 ringgit gross per month. So you can see how inaccessible a basic financial product is to most Malaysians in the mass market space. And Bank Negara, the central bank in Malaysia, came out with a report last year that basically said 3 out of every 4 Malaysians are worried that if they had to put together 1,000 ringgit, which is about $250 in the event of an emergency, will have difficulty in raising 1,000 ringgit. So what we're trying to do in Hello Gold is to enable these customers to have access to not just an alternative to cash savings, but also a way to get access to an affordable loan that's collateralized by gold. Sorry. Now coming back to the map's missing, but coming back to the Islamic world, within Asia and China, there's some 300 million Muslims, and across the world there are 1.8 billion Muslims. Of these, there are probably about 900 million Muslims that save, and they're saving using cash. So we believe that, as Shaukai pointed out, the introduction of a globally accepted standard on gold from an Islamic perspective will open up a huge opportunity for gold producers and gold suppliers, because what they need to do now is figure out a way to access a gold product that's affordable for them, whether they're institutions, and there are many providers here that provide that, or at the mass market level. For Hello Gold, how we plan to give access to our customers is very simple. We work through partners. So in our launch, we have partnered up with one of the largest retailers in Asia, Aeon, and we're launching with them in Malaysia. Aeon has 100 million customers across Asia and about 4 million customers in Malaysia. We're now in process of negotiating with a mobile operator with 10 million customers in Malaysia and 300 million customers across their mobile portfolio. And with this, we are able to access these customers at an affordable price, and also more importantly, because gold is such an interesting asset, give our customers or our potential customers the trust that they need through our partners' brand equity. And in terms of our revenue model, basically, we're no different from most other bullion providers. We make a spread on the bid-ask, and we charge an annual management fee. Over and above that, because effectively we are creating a narrow bank, we also get a return from all the loans that we disperse. Turning to Sharia compliance. A lot of bullion providers out there can easily get Sharia compliance because they provide the gold at near real time, and the standard allows for T+3. But one of the challenges that anyone that targets the mass market and frankly speaking the less educated is that they have differing and very entrenched views of what constitutes Sharia compliance. So for a lot of them, they want real-time settlement. And for some of them, even in spite of the standard, they will want to see the gold physically in hand. So for us at Hello Gold, what we try to do is try to be as conservative in the way that we've constructed our operations. So we have physical redemption. It's real time, it's not T+3, to ensure that we can reach as many people as possible. The complexity that we face is because we're also in the lending space, is that we need to make sure that our lending products are also operationally Sharia compliant and contractually Sharia compliant. And as William alluded to, with the advent of cryptocurrency and ICOs, we're now in discussions with our money advisors, our Sharia advisor, to create a Sharia compliant gold-backed token that will hopefully enable us to widen our product reach to a wider audience.
Question for Robin. Have you launched? Sorry, I'll start again. It's John Reed from Royal Morgan. So it was a very interesting panel. Thank you very much. Question for Robin. Have you launched? And if so, what sort of volumes can you talk about?
Yeah, we've been beta since the beginning of the year, and we launched a product with our partner 6 weeks ago. In terms of traction, we've marketed to just over 150,000 of our partners' 4 million customer base, and we've KYC just over 1,000 customers. And just to give you a sense of how, well, I wouldn't say easy, but how simple it is, we've spent a total of $2,000 on marketing to reach that 150,000 users and to secure 1,000 customers. So from a customer acquisition perspective, it's been relatively cheap compared to most mass market retail products. The average customer holding is $150 per customer because we're obviously targeting the mass market. In terms of benchmarks on customer acquisitions with other financial products, I think we are punching above our weight, given our strategy.
In terms of the product development, the two arms of your current effort is new market development, new product as well as application. In terms of new product, is there any in the pipeline further in the Middle East region or in other parts of the Muslim world? And what sort of education is it? As you said, it's just corporate. Do you have a retail education as well? Thank you.
So thank you, Albert. We do have a strong pipeline of potential new products coming up. Unfortunately, they're all under NDA, so I can't talk about any specific ones. What I can say is that as a market development organization, we definitely want to have the widest possible types of products out there, both in terms of the geography and also in terms of who those products target. So on the stage, we already have the SDF contract is clearly an institutional product, and then Robin's Hello Gold is a retail product. So we want to replicate that type of diversity in other regions of the world as well. To answer your second question about outreach, we have been doing a lot of outreach to institutional investors, asset managers, for instance, government-owned asset managers as well. In terms of the sort of the education for the mass market. That's actually something that we want to do with some of the partner banks that we're dealing with. If you're going to launch a retail product, for instance, we want to work with them, those partner Islamic financial institutions, on educating their customer base, whether that's through seminars or training their sales staff, etc.
Panel, thank you very much for the speech. I'm from Singapore Traders Association, and also my own company. We run a gem museum in Singapore. I just want to ask about the Sharia compliance. You said there were 6 things. So is we go, other than, wow, there's a lot of airplanes. So other than this, is gemstones part of Sharia?
So the 6 ribawi items you're talking about are gold, silver, date, wheat, barley, and salt. Gemstones and precious stones are not generally part of that basket, but it's not to say that there are no Sharia implications. I'm not a Sharia scholar or an expert in Islamic law, but generally speaking, what Sharia means is that you have to make sure that the transactions that you do fit into the prescriptions of Sharia finance. They have to be fair and equitable. I would refer you to a Sharia advisor, but I can tell you that gemstones don't fall into the category of 6 ribawi items. Just to say that I think that the reaction that we've gotten so far on this project has been overwhelmingly positive. We've been traveling through this region and also through the Middle East to talk about Islamic finance and the opportunities that the Sharia standard has presented. And the reaction we've gotten has been very, very positive, both from investors as well as from the financial institutions themselves. When we launched the standard at an event in Bahrain in December last year, the Crown Prince of Bahrain was in the audience, and he took the first question. His question was, why did it take you so long to come up with this? So I think that gold has been around for a long time. Islamic finance has been around for a long time. It's finally time that the two sort of meet in the middle and find a happy medium. So with that, I think I'd like to conclude this panel. Thank you all very much.